Welcome to Money Manager. Let's talk about Africa now. It's in focus, of course, as all emerging markets are. In the studio in Johannesburg is Godfrey Mwanza, who is a portfolio manager at Absa Asset Management. We're going to talk about the Absa Africa Equity Fund. A few people are starting to become Afro-pessimists again, Godfrey. Is that relevant? Is it just an emerging market story, or is it just an Africa-specific story, do you think? Because I'm getting a tangible effect of this pessimism when I speak to people every day.
Well, that's very true. I think it's more of an emerging market thing. There are some Africa-specific, pessimisms that sort of have shown up more recently, and I think it basically is attributed to the fact that, from a cyclical standpoint, if you're looking at least the markets, the large markets that we focus on, specifically Nigeria, Kenya, and Egypt, there are cyclical challenges across the board. And I think if you have a very short-term focus, if you focus on the challenges in the immediate term, you can be forgiven for thinking that it's representative of a longer-term structural challenge. But I don't think that's the case.
There's a book that's just been released by a chap who's an Oxford professor. He's 41 years old. It's all to do with the fact that there are 1,826 billionaires in the world, and this book tries to tell you how to become number 1,827. And one of the things he says, one of his secrets, so-called secrets, is to go to places where people don't want to go. The worst places, he says, are often the best. And the worst place to go maybe 2-3 years ago was Egypt. And you got 34.1% of your portfolio in Egypt because you saw opportunity, presumably.
Well, yes, there's a lot of well-managed companies in Egypt. It's, technically speaking, it's an emerging market like South Africa is, as opposed to frontier, as a lot of other, particularly in sub-Saharan Africa, that you have. We're very, very bullish on Egypt, but at the same time, the way that the portfolio is positioned is much more defensive than just the weighting might suggest. At least half of that sort of 34% weighting in Egypt is defensive names such as the monopoly cigarette manufacturing company in that country, which trades on a 20% free cash flow yield and a 9.5% forward price earnings versus a 16 times for BAT, for instance. So it's very cheap, and it's a good name to hold. Another name we like there, also quite defensive, is Integrated Diagnostic Holdings, which is the largest by far private sector pathology and molecular diagnostic company in that country, which has a return on pre-tax return on invested capital of over 110%. So you do get some really fantastic businesses in that market. I mean, the last one I mentioned recently IPO'd and has had a really good run. But if you see any pullbacks from people who get pessimistic by focusing on the short term, that's definitely the kind of company that you'd want to add to.
Let's stick with geographies now before we get to sectors and specific stocks, if we can. Egypt, 34.1%, I've mentioned that. And Nigeria, 22%. There's all sorts of issues there, whether it be the influence of the oil price, the internationally traded oil price, or domestic issues. Nigeria, any temptation to maybe reduce your exposure there because of its specific problems, or is this one because of its massive population that you have to stick with?
That's a very good point. I mean, again, like I said earlier, the cyclical problems in Nigeria are very significant. And with Nigeria, out of all the major regions, so northeast and west, with Nigeria, it's probably most ambiguous at this stage, in my view, as to whether or not the short-term pain, you can look through the short-term pain and project a very good and rosy long-term structural story. So the way to, the weighting in Nigeria is actually very underweight compared to our benchmark. And the way to play Nigeria, in our view, is to sort of stick to quality names that can ride out the current challenges like champions and still be in a good place to benefit when there's a turnaround. But as far as the turnaround is concerned, I think investors are going to have to be patient. I think there's still some imbalances that have to be ironed out, particularly the currency, that we see more devaluation there. We see tax rates we're going to have to increase because the government, their number one earner, obviously exporting of oil, has come down significantly, obviously, with the oil price. Taxes will have to go up. Government spending will have to go down. That's contractionary for the economy. And in the short term, there's going to be some pain, and there's going to be currency devaluation. Whether or not that they go through this pain and then everything improves afterwards will depend on the policies that the new administration enacts, and we don't really know what those are from an industrial standpoint, at least until we have the cabinet sworn in sometime in September. So it is tricky. So the way to play it, we're underweight, but we're focusing only on the quality names that will ride out the storm.
Yeah, I think quality is the key here, and also liquidity is the key. And when you look at the geographical makeup of your portfolio, 34% Egypt, as we've said, 22% Nigeria. The next one is Kenya when we go to East Africa, and that's 16%. Again, is that simply because these are the markets that you can get in and out of relatively easily, or is it also because the companies there are more stable, more developed, and have more prospects for the future, rather than these little startups in smaller countries that might not last the term, if you like?
Sure, liquidity definitely is a function. The thing about a country like Kenya, like the other countries I've mentioned, Egypt or Nigeria, Kenya is a hub for the East African region, so the businesses tend to be bigger, more liquid, and just because they have that scalable opportunity set that you may not get in smaller markets, for instance, a Botswana or a Mauritius, in terms of the scale that these businesses have as an opportunity. Kenya and the East Africa region, if you look at that in terms of an allocation, if you include Uganda and Tanzania, is about 23% of the portfolio. And the integration, the further integration of that region, I think, sort of justifies its weighting in the portfolio. But like everywhere else on the continent, more fuel for perhaps the pessimist, but is that there are challenges cyclically. But like I said, if you look through the cycle, Kenya and the East African region in particular has probably the most bright outlook in our view, compared to I think even more than Egypt, and certainly much more than Nigeria at the time being, before we have the cabinet sworn in and before we have clarity on policy.
Before we go to sector allocation, I want to mention one country now, and you're going to be in hot water with the big cheeses at CNBC Africa, because we've just opened a bureau in Rwanda, and Rwanda is not on the list. I've got all the other ones. I've got countries like Morocco with 1.2%, Tanzania with 2.4%, that sort of thing. But seriously, it's a small country, but it's got a very high GDP growth rate, and people talk about it as the Singapore of Africa. Any aspirations to get in there?
Aspirations, absolutely. There was a recent listing, as you will know, Crystal Telecom, which is essentially MTN Rwanda. There are other listings like Bank of Kigali and Bralirwa, all quality businesses. I mean, valuation and price aside, Rwanda is definitely a market that would be interested to invest in. The challenges for a lot of investors, such as ourselves, is getting custody set up to be able to trade in that market, and hopefully over time, with more interest, perhaps an investor interest, perhaps the sort of investor services industry can make that easier for funds like ours to access that market.
Okay, financials now, and that is the reason I say financials is because that's your top sector. Financials, I think, if I can see this, 38.2%, followed by consumer staples, 29.5%. So in other words, the burgeoning middle class, the relatively new wealthy in Africa are buying things, and they need to transact in order to buy those things. So this is particularly obvious. What is not so obvious is your relative underweight telecommunications. But let's go financials and consumer staples first, please.
So financials, I take your point about the burgeoning middle class and the underbanked segment of large populations. That's certainly a theme that we want to have exposure to, and that is the case in all markets. Nigeria is very underbanked, and Egypt also is very underbanked. But the business models of some of the banks in Kenya are trying to service markets or individuals that are not necessarily even in the middle class, but are in the lower income. And the way that they're doing that is obviously by having distribution channels through mobile banking, for instance. So it's not just the middle class that you're trying to get exposure to if you're in financial stocks in Africa. It's also the underbanked, unbanked, lower income category. So it's a massive opportunity, and you do get some very well-run companies that are trading at very low multiples. I mean, a good example is Zenith Bank in Nigeria, which has about half the amount of shareholders' equity as Investec, the bank, but makes about 10% more in net income than Investec, and trades at a 20% discount in a market that has possibly less than 5% retail banking penetration, that has a GDP that's 22nd in the world. And very well run as well. So the opportunity there is fantastic. They also tend to be the most liquid. The reason for that is because banks are essentially high leverage businesses, so they always need capital from the market. So they're always the first to list in any of these markets.
Godfrey, I think what's most exciting, I mean, never mind the unbanked and the underbanked, what about in the future when they become banked, the new middle class that we've been talking about expansively? What about when they want insurance policies and investment portfolios, that sort of thing? I mean, the potential is absolutely enormous. Quickly about consumer staples, because there's been a couple of South African companies that have taken a little bit of, they've dipped their toe in the Nigerian water and found it a little bit chilly. But it's obviously thriving. It's obviously a long-term prospect, which is also exciting.
No, absolutely. I mean, as far as the South African companies that have struggled there, I mean, it's very important to know why they've struggled. So a lot of times the business model is not, and the product is just not calibrated for that market. I think Woolworths is probably a good example, where a lot of the products were being imported, but the brand wasn't something that the Nigerian shopper particularly liked, associating the Woolworths of the defunct now defunct Woolworths of the English version, as opposed to the sort of premium brand that it represents here. So there's always a reason why, and of course right now you'll probably hear more horror stories simply because the cycle is there has been a slowdown in consumer spending in a place like Nigeria since 2012. But the consumer story obviously is still very much intact. There is no stopping the current, which is by 2020, Africa will be adding more people to the working population than any other than the rest of the world combined. So the population story is still very much intact. That's not going to go away. So it really is a question of a combination of very good policy and investments, private sector, public sector, and getting your model right. And there is a slowdown right now, but in the long term, it's still a pretty strong story.
Godfrey, it's very interesting because there's just a brief anecdote now to illustrate exactly how the different African countries are so different to South Africa. I was in the Seychelles recently watching an English football match, and all the advertising was Guinness from Nigeria. And in South Africa, the Guinness brand is absolutely tiny. In Nigeria, it's massive. So you can't think that you can suddenly transport your product and your offering to a different country without doing your research. Thanks so much for your time this evening. That's Godfrey Mwanza, who's from Absa Asset Management. We've been talking about the Absa Africa Equity Fund. That's it for Money Management.